We have Kumar with DwellFi with us here tonight, and I just want to point everybody, because we're going to get a little nerdy here tonight. Head over to dwell.fi, that's F-I, and you don't use the .com, it's dwell.fi, and see what Kumar and his team are doing, because we're going to be talking a little bit about Web3, blockchain, NFTs, and I know all of that is verbiage that we're probably not familiar with, but I want you to hang on here, because Kumar is going to explain it all. It's going to make perfect sense. Right, Kumar?
Yeah, thank you for giving me a big question for Gillian task. But yeah,
So let's start things off, Kumar. You probably have done this a million times, but I'm going to ask you to do it one more time. Take a moment in like 4 minutes. Explain to everybody the concept of what you're trying to do here.
all right, thank you. So let me try to be as simple as I can, and feel free to ask any question in between, representing the
Sure.
audience. so, so what we're doing right now at DwellFi is, I would say probably it's nothing new than the regular real estate people do. It's called syndication. So as a syndication, you go and basically create a syndicate, buy a property, and once you buy a property, you all as syndicate member are part of that property. And then you have rental income coming if you have investment property, so you basically get the rental income. And then eventually, when the entire syndicate decide to refi or sell it, you sell this. That's the typical way to do it. Now, what we saw opportunity, or I would say problem in this thing, is once you get into syndicate, there are a couple of things. The one of the biggest problem in the syndicate is liquidation. So now there are five partners, limited partner in the syndicate, and now one partner wants to exit. It's kind of tough. You have to go through the paperwork, legal work, all these things, and then second, you have to find someone. There's a liquidity discount, and so that is the problem. And you cannot scale in this model. You if for say I want to be a part of a syndicate, I have $100,000 to disposable to put in. It's very hard to, like, either I have to go and find those people who have this portfolio, or I myself go and create this portfolio. So those are the problems which we saw. So now let's say take the same approach and solve this with the help of blockchain. So now, of course, when I say blockchain, people will like, let's it's a little confusing, but for a moment, forget about blockchain. Just think about this: that now you are in a syndication, same syndication. You can buy in with a group of people, and then whenever you want to exit, you can just exit, and exit in the sense like you can sell it, your membership interest, to someone else, and they don't have to worry about, okay, I have to go and update the title, I have to go and update the deed, I have to basically go and set up my bank account so that I can get the rental income. All these things you don't have to worry about. So you sell it and you're done. So, and then you want to go into another property which is on our platform similar, so you go and just say, okay, I see this property, I'm interested, someone is selling it, I go and click buy that. Now I'm in that property, and I'm getting it. So all these things happen under the line blockchain. So what blockchain does, it is basically do a couple of things. First of all, it allow you to have a proof of ownership. So everyone knows who owns what, and it's on the block. So nobody has to like argue on this. And so anyone can go and see on the blockchain that who owns what property. Then when you do that, the second part of that is transactions. Now it's a much smoother transactions. You can do much faster. You don't have to worry about, and I can go into detail how why you don't have to update in a title and deed, but you can do multiple of transactions. So you can go in and out. Apart from that, now uh, what else benefit of blockchain is that once you get into this on our platform in this structure, you own that asset. So you that like if you have a 10% stake, you 10% stake is your equity on that property. So it is a hard asset back NFTs. We use NFT, and I'll go into that later on. But now you can take this and then plug into DeFi world, which is decentralized finance, and you can get a lot of benefit of that DeFi world, but again, it'll be more technical. So I will go into that detail later. But let's say example will be you have a 10% interest in an LLC. Benefit of doing DeFi is you can take that 10% and you can collateralize and take a loan on that. You can do a HELOC on that on your membership interest. You cannot do in a normal LLC structure. Apart from that, the other benefit of DeFi is there's a lot of different ways where you can actually stake it and then earn interest on that equity. So barely just having that equity, ownership of that equity can also give you interest. So these are the benefit of DeFi, which you can plug into and start getting benefit of that. So that's what it is on a high level how it all work. But we can start deep diving into that.
Sure. So, well, let's just start things off with the concept here. Now, you're essentially kind of modernizing the syndication kind of concept. Do you have to follow the syndication rules because you're on a blockchain? Do you have to work with only uh, certain investors, for example,
So
because of the syndication?
good question. So the way we have structured it at this time, it's a non-accredited offering. So basically, a non-security offering. So it's not that it's only for accredited investor. As a non-accredited investor, you can do that too. But still, as a syndicate, you have to work with a county. You have to be responsible for your taxes and all these things. So you have to go through KYC. KYC is know your customer. So if you want to do any kind of purchase in blockchain world, so you have to go through KYC. And then another thing is AML, which is basically called anti-money laundering. So that we are like you're not uh, basically laundering the money. So those
Right.
are the two things you have to do. But apart from that, yes, it's open to everyone. Anyone can come and participate in this.
Okay. So you don't really have SEC guidelines and requirements to adhere to.
There is SEC guideline and requirement. We are working with that guideline. So based on that guideline, the way we have structured it, this is a non-security offering. So people will not. You don't need an accredited investor right now for this thing. The
Okay.
way we have structured it. So, but that's the reason why we are going with a specific type of properties right now. We are not going with a commercial property. Once we get into the commercial property, then for that time we will do the SEC regulation license, like FINRA licenses and all, and then we will enable that. So right now we're not doing. We're taking step by step.
Sure, sure. So the initial offerings that your properties you're trying to acquire, are they single family homes? Are they
Short-term rentals,
I
single
see a
family.
nod, so I'm going to go stop there. Single family homes is what you're focused on right now.
Yeah, single family homes, short-term rentals, and medium-term, long-term rentals.
Okay. That makes sense. So with all of that, so just so that I know that I'm following along, you essentially are setting up a platform, if for lack of a better term. If
Yes.
some people, you mentioned earlier before we hit the record button, you compared it to something similar to like Coinbase. You can go on there and buy Bitcoin and a variety of
Altcoins.
cryptocurrencies. For example, you're selling NFTs associated with that property that people could buy and trade and sell in an environment, if you
Yep.
will. This NFT gets a blockchain, which is a unique number identifier that's then written to a ledger so that it's identified and people can see the transactions. So there's that going on. Are you essentially building then a platform where that type of transaction can occur, where people can buy and sell their interests, if you will,
Yeah.
in those investments? Is that it?
Yeah. So very good. Actually, let me explain again that same thing which you said. So the way we are building is exactly like a Coinbase. So it's as a for a user don't have to worry about okay, I need a wallet, I need this and that. For user, it's a frictionless experience. You come in, connect your bank account, and you can purchase one piece of a property fraction. Those property will be an NFT. You will hold that. Now, if you want to sell that NFT, you can do the same thing on our platform. You say, okay, this I'm selling my interest in this property, which is an NFT, someone else will come and buy it. So you can set up your floor price. This is my price. If someone wants to buy it at that price, they can buy it, or someone more people are coming, so there'll be a bid. You can go for a higher price too. But that's simple it is. So and then for more advanced user, so if you are like more advanced user, so you can actually have a wallet, so you can connect a wallet and then you can buy it through your stable coins, and then you can purchase those through your cryptocurrencies basically. But if you're not advanced user, you just getting into the web3 world, so it's very simple. You connect your bank account, buy it, and you hold it, and when you want to sell it, you sell it.
Okay. So with all of that being said, so you're taking US dollars, converting it to an NFT. You're buying an NFT just like you would buy a piece of stock, if you will.
Yeah.
How do the proceeds, or you were talking about any kind of income generated from these properties, how does that come back to the individual then? Does it come back to them through a cryptocurrency, US dollars? How does that piece work?
So it depends like how people wants to receive that in US dollar or crypto USDC. So the way it works is, so all these properties goes into a DAO. So let me explain what is a DAO. DAO is like it's called Decentralized Autonomous Organization, but it's basically is kind of a company LLC. Literally, it's kind of an LLC.
Sure.
So that a DAO has a treasury. Treasury is like the bank account for the DAO. So what happens is when the rental income coming to a DAO, basically that money goes into this treasury, and from there it is distributed to each member. So each member have a wallet, and we do all these in the back end. So we have a custodian wallet which set up for all these. So all the money will go into those individuals' wallet depending on their interest, membership interest, how much they own, and everything runs through a smart contract. So it's basically it's open, so you can see what is the transaction happening, and then once you hit, it goes into a wallet. But now if you say, hey, I want to get into a USD, so it will be then it will be transferred into your US bank account. But all these process we do it, so it's going through your the payment rails
Sure.
infrastructure.
Okay. Yeah. So let's talk a little bit about but before we do, I wanted to remind everybody. I understand this is it sounds a little complicated. So head over to the website again, dwell.fi, so it kind of clarifies a few things for you. So Kumar, a lot of people when they hear NFT, I think I think I'm safe to say, if people are aware of NFTs, they think of the apes that are being bought and sold, that are these images right now. Is that what they should have expect? I know this is a pretty simplified question, but when you say NFT, what does that mean? Is it a certificate? Is it a what do they get in return? I think that's what people are going to think of when there's an NFT involved. It's an image or something, but it could be as simple as just the ledger number. I mean, it could
Yeah.
be anything. It could be a pixel for that matter.
Yeah, no, thank you for asking this question. It's actually pretty obvious. People will ask when they say NFTs, ape, and all. So it is actually in a very simple way. It's basically a unique number, of course, because which is on the ledger, which uh, is representing your ownership in that property. But the way it is basically a piece of art for when we do it. So when you get so each property has a unique art we give, and then you fractionalize. So when you receive it, it'll be a piece of art. So you can actually look into your wallet. You say, hey, this is my property art looks like, and but basically that is representing your ownership interest in that property. So another question generally people ask us like, okay, it's this NFT. What happens if someone steal my, like, I'll lose my NFTs? Will I lose my house or will I lose my equity? So in our case, the answer is no. You will not. The reason why, because the way we have done it is there's two proof of your ownership. One is on the off the chain, means which is on the DAO, which physically, and then the second is on the chain, which is through NFT. So let's say you lose your NFT or someone steal from your wallet or whatever, like could happen in a lot of things. Then what will happen in that scenario? You will come to our platform and you say, because we've done the KYC, so we'll ask you to prove yourself. Once you prove yourself, what we do is we issue you a new NFT and we burn that old NFT. So that way you're safe. Your asset will always be safe. Like, you will not lose your physical asset, and the only thing you lost is your NFT, which was stolen.
Sure. Okay. So let's talk about the physical property then. Are there places where you're focused on? Like, what part of the country are you buying the
Yeah,
real estate?
so we're looking into right now we moved our first property in DC area, Washington DC. Then we are looking into multiple other places like Arizona, Florida, mostly in the Sun Belt area. That's where we will start looking into. But right now we are just doing the first POC, which is in DC area. Once that POC is done, we are working with like 4 partners right now. So depending on this, where they want to deploy the capital and want to get into market, so we'll get into that market. So right now that's our focus is.
Okay. So when you acquire the property, then what is your plan? Like, do you have a team that understands real estate in the fact that what needs to be done in order to convert it to be the rental property and getting the repairs done and the any kind of modifications? I would have to think that that acquisition amount that you're talking about that you're accumulating with your initial investors are going to have some of that capital ready for you so that the renovations and stuff can occur.
Yeah. So let me clear on this thing. So DwellFi is we are a software company. What we are doing is we don't like do the property when we work with partners. So as a partner, let's say you are a partner, you will come, you will create a syndicate, you'll have your properties, and we
Oh,
will help you to facilitate all these paper like the entire transactions which I explained, and the other benefit of DeFi, all these things which we do. So you are just, I would, if I have to explain it a much simpler way, kind of the analogy would be we are kind of a Shopify for real estate. So anyone
sure.
can come and then start their syndication. They can start their own portfolio company and buy more properties, keep increasing their portfolio. And we take care of all these. So you, as a real estate investor or real estate fund, you focus on your own business, that you know what is your core strength is. And we come as the company which can support and help you scale it at a faster pace.
Now I'm following you. It's almost I almost want to say you say Shopify, but it's almost like a Kickstarter where
Yeah.
somebody's starting a project and they can put it on your platform and saying, okay, here's the property, here are the details, here are the numbers. If you want to be involved,
Yeah.
you can buy and sell your NFTs. So you're generating the platform in which to create the transactions.
Yes, we are just making it
So
simpler for people to participate and then add liquidity, because all these people who are doing it, basically we are creating a secondary market. So all anyone can come and buy and sell and trade. So you don't have that issue.
okay. So let's say I found a property and I'm going to put my property up there to do this to do the NFTs. I'm guessing I have to provide like a background on the property and what I plan to do.
Yeah, so basically you will come. So we'll set up a web. We already have a website. So basically, so for example, if you go to right now surfturf.xyz, you will see it, and then there is an example property listing. So you will see how it will look like. So basically, you will give a property. You can click and see the property. Then you see on the right hand side, like, okay, what are the fractions you can buy of that property, and what is the percentage you will get, and detail about the property. And then, for example, if you are planning to do something, you can explain what you're trying to do, and all the data we can pull about that property, the historic data from LMS and all these from
Sure.
the APIs,
Okay.
and display that.
So surfturf.xyz is an example
Yeah, and
of
you
what you're
in,
talking about.
and in that one there's an
Sure.
example
Yeah,
listing.
this looks a lot like, yeah, I can kind of see this now. Here. So you have 0.3% equity, the cost associated with it, kind of a summary, how to buy, governance. Okay. Yeah. Do you see the light bulbs going off, Kumar? I'm getting it. So, so what happens here now? Like, so let's say, for example, I would guess, just like a Kickstarter, if you will, if it doesn't get fully funded, it just kind of collapses. And what
So
the
as a sponsor, you are buying the property, so you will say, okay, either you leverage bank and you can buy the property, or and then you can still sell it, and then you can pay off the mortgage. So it's up to you as a sponsor how you want to take deal that one.
Oh, okay. So as the fella bringing the property, I have the option of like making up the difference or something. So because what I'm saying is that if the numbers don't jive, I'm not going to invest in this. And then, if it's not fully funded, then the property may not get purchased.
Yeah. So that's the reason why you will, as a sponsor, you will always do your due diligence. You come with the right property, and you come with like, okay, how much you want to raise, how much you are putting in that property, and then you close that property. And once it's closed, you basically every member on the property have their ownership in this property, and if they want to exit, they can do that. Basically, sell to someone else that price or higher price. But that's what it is.
Sure. So let's say I did buy this and now I want to sell my piece of it. So are you going to have, so I have an NFT. I could basically create a web page on your site as well, like
No, on
similar
that,
to this, just saying here, these are my holdings. I'm looking to sell them off.
yeah. So there will be a marketplace where it will be displayed all the listings. So you have like 10%. You are selling, someone else selling 5%. So all these things will be available, and anyone can go and buy. So when they go to buy, they basically land on the same page. They'll see all the how much this property is generating, what is the yield, and everything, and then you can buy and sell.
Okay. Yeah, that makes sense. So if you want to take a look at to see what we're talking about again, this is surfturf.xyz. If you go /example, it kind of takes you right there too. They got Baltic Castle
Yeah.
as an example here. A little extravagant, Kumar. But yeah, this is really interesting. So how many people I know you said you're working on a POC right now, which is
Yeah.
proof of concept for those who might not understand what POC is. So you're pretty early stages here
Yeah.
yet. Let's be
Yeah.
frank.
Yeah.
What is your plan? How is DwellFi going to be making money at this?
Yeah. So our two ways we make money. So when people transact on the platform in the secondary market, there we take the basically a commission, and then when you bring your property, and then when you sell the properties, people will of course buy. That is another transaction. So that's where we make money. And
Do
then
you do you charge for any kind of management of the
yeah. So
essential syndication?
so there is an operation fees, which basically we take it from your rental income. So it's a percentage of the rental income. So we don't charge you. It's coming from that. Yeah.
Sure. Okay. So how many people do you have involved in this right now? By the looks of this page, it's quite a sizable organization already.
Yeah, we have a lot of people involved who are seriously looking into the working with us, because yeah, it's a very interesting concept. We started, and then it's like a DAO. We started it, and then a lot of people joined the DAO because it's interesting and they all want to contribute.
Sure. Okay. Well, I think this is, like I said, you're onto something here. This is kind of an interesting concept you got going on. With all of that being said, I think we did our best here today to try to simplify things as best we could regarding this. We were joking a little bit because let's face it, people, when it comes to real estate investors and realtors and everything, we're kind of behind when it comes to any kind of technology. So, with that, I would really encourage you to just go to the website, dig into this, and try to get a better understanding. So, dwell.fi, But in the last few minutes, Kumar, is there a question or a concept that you think we should have tried to tackle here today?
Yeah, I would say one thing is about this the whole real estate market. If you think about, and you're coming from the real estate, you understand it way better than me. Is There's two things in the real estate. One is it moves very slow, and the second thing is there is I would say liquidity lock huge. So if you just compare, do a simple math, and you see the size of the real estate market is just in US is I think $59 trillion, and now compare it to crypto. Uh, Crypto is close to 2 trillion right now, but now if you think about the trading, so crypto trading is $20 billion a daily, I guess, if I'm not wrong. That's what it is. And compared to that, in this one in real estate is way less. So I don't exactly recall the number, but I know by percentage is 400x lower. So the problem is, so when we started looking into this, yes, there is like, why you buy real estate? Because you buy and hold it. That's fact.
Mm-hmm.
No one asked that question. Definitely you do that. But there is another thing is, when you buy and hold, the reason why you don't do these transactions, because it's very hard, and it moves slow, and involves a lot of things. The moment you reduce that fraction, like a friction, sorry, for doing these transactions, then you will start seeing movement in this real estate market, and people will be more interested in buying and selling and doing these transactions. And then, I'm not saying that you compare it with the crypto, because it's a completely different asset and this is a different asset. But still, if you just 40 trillion, 49, $59 trillion market, and if you try to improve by even like a decimal factor, you are looking into billions and billions of dollars transactions.
Mm-hmm.
So if you look from that angle, then you can see how massive this market and how massive this problem statement is, like when you try to solve it.
Right. So, so you do bring something there. Is the concept of the liquidity and being able to transact? I mean, we talked early on when it comes to real estate investing. It it is it is a great vehicle in order to accumulate wealth and to find some way to achieve financial freedom through rents and a few other aspects. But you do bring up a great point. It takes, let's say you do need to liquefy, need the liquidity. I'm going to have to edit that piece out. The liquidity, but it takes, let's say you put the property on the market, that takes, it can take how many days, and then it typically takes upwards of 30 days just to get through the title and everything associated with it. Next thing you know, you're 60, 90 days out from where you started. It takes, that process is very long in order to tap into any kind of equity that might be locked in that property. What
Yeah.
you're really doing here with DwellFi is unlocking that and making it transactional. So it is really interesting how you're doing this, and like you said, being able to step past the title stuff, that would be huge. I can see what you're aiming for.
And one more thing I would like to add in this one. So when you see liquidity, we talk about liquidity. We see liquidity in the two forms. One is, of course, buy and sell, the transaction wise, and the second thing is you have an equity. You're holding an equity, and that money is today is locked. But that can also be leveraged, like people do. You can collateralize and take leverage, but generally, when you're in the syndication, it's literally locked. So as one membership interest, I cannot use that my liquidity and do anything with that. So I have a 10% stake. That 10% stake is locked. But in the way we are doing now, your 10% stake is not locked. That is liquid. Either you can sell it or you can collateralize it and then take a HELOC. So
Mhm.
those are the two ways we see the liquidity getting into the market. So it's not just the transactions, but also through that. That opens another whole world of finance where people can come and then basically serve this market for liquidity.
Sure. No, this is really interesting, Kumar. You can probably tell we could probably keep going down a rabbit hole here because I foresee this being, a lot of real estate investors were in real estate because the stock market isn't something that we can touch, feel, we can actually visualize the upside. With real estate, we can. Like, a great example is fix and flipping a house. I buy it at a discount. It's in terrible condition. I put in the resources and time into it. I turn it around and make it twice as valuable as when I started. That is something that, based on the information that one of your listings could provide, people, real estate investors could actually see the upside on some of these properties and some of these projects. So, really interesting concept, Kumar. I appreciate it. Maybe once you're launched, you can come back and we can touch base, see how things are going, how things are progressing, and again, head over to dwell.fi and check out the platform. I really appreciate it, Kumar.
Thank you so much for having me, and I hope this was helpful.
Yeah, this was
You're
great.
listening. All right. Thank you.